5 minutes of your time could save you hundreds or even thousands of dollars in credit card interest. Most cardholders never make the attempt. The common assumption is that a massive financial institution will automatically reject any request to lower an annual percentage rate. But credit card companies operate on strict profit and loss logic. They actively want to keep customers who pay on time, use their cards regularly, and have a long account history. Replacing a reliable customer costs the bank money in marketing and onboarding. In many cases, it costs the bank less to lower your APR than it does to let you walk away to a competitor. Understanding this math changes the dynamic. Asking for a lower rate is a standard business calculation, not a personal favor. Before picking up the phone, you need a brief preparation phase. You have to gather your leverage. Take 1 minute to write down these 4 specific details: your current interest rate, exactly how long you've been a customer, your record of on-time payments, and specific lower rates you have seen advertised by competing credit cards. Identifying a competitor's lower rate proves to the representative that you are actively shopping around and know what the current market offers. Walking into the call with this data turns an open-ended request into an informed, structured negotiation. When the representative answers, you need to set the right tone. Be polite, but confident. Read this exact script. "Hi, I've enjoyed being a customer, and I've always tried to keep my account in good standing. I recently noticed that other credit card companies are offering lower interest rates. I'd like to stay with your company. Is there any way you can reduce my APR?" This opening accomplishes 2 things at once. It establishes your loyalty and causative account history, while clearly communicating the threat that you might take your business to another lender. By presenting the issue this way, you frame the entire conversation around customer retention, which helps bypass standard customer service scripts. You should expect some friction. The first response is frequently a soft rejection, designed to test if you are serious. This diagram maps out the possible paths the conversation can take. After your opening ask, the representative will usually fall into one of 2 categories: a hesitation or an outright no. If they hesitate, gently press the issue. Say, "I've been comparing my options, but I'd prefer to keep this account if you can offer a more competitive rate." If their initial response is a firm no, pivot your request. Ask, "Could you check whether there are any promotional APR offers or retention programs available for my account?" If they still refuse, you escalate. Ask, "Would it be possible to speak with someone in the retention department or a supervisor?" Following a predetermined map keeps you focused. If you get a rejection, you simply move to the next node on the flowchart without freezing up. Eventually, you may reach a representative or supervisor who agrees to reduce your rate. Do not hang up the phone yet. Ending the call without documenting the exact details leaves you vulnerable to miscommunication or internal bank errors. You need the answers to 3 specific questions before the call ends. First, what is the exact amount of the new APR? Second, on what date does the new rate begin? And third, is this lower rate temporary or permanent? Promotional rates often expire after 6 to 12 months, reverting to the original high APR. You have to know the timeline of your new rate to plan your payments accurately. A verbal agreement from a customer service rep is only useful once you have these exact metrics confirmed and written down. There is always a chance that the final answer from a supervisor is a definitive no. If that happens, thank them for their time and hang up. Never argue. Wait a few months and try again, especially if your credit score improves. In the meantime, look at balance transfer offers from other issuers to see if the math works in your favor. If you do secure a lower rate, look at how your debt breaks down. On the left is your principal debt. On the right is the accrued interest. A lower APR only shrinks the interest column. The principal remains exactly the same. To realize the savings from that lower interest rate, you have to continue making payments that are significantly larger than your monthly minimum. A lower APR stops the bleeding, but aggressive repayment is the only way to cure the debt entirely. Try making this call today and let us know in the comments how many percentage points you dropped your rate.